Hi guys, George DeSantis here with the Look at the Market for the week ending February 26th, 2016. This past week we saw a move in the market. We anticipated it last week. As we saw, there were many bullish indications, at least for the shorter term, because the long-term charts still look very bearish. So we'll take a look at the monthly chart first of the S&P. So on this monthly chart, nothing much changes because it's such a long-term chart. You know, it's like a big aircraft carrier that turns very slowly. However, I pointed out last week that this candle, this price bar here, is giving us, in candlestick language, a hammer. In other words, we opened here, or we closed here so far for the month. So we'd have this long tail on a candle, shadow, and we would have this small body, and that would be give us the configuration of a hammer, which is attempting to hammer out a bottom or a low, and we'll see how that develops. Once again, that's the only bullish thing we are seeing here right now, because MACD is still trending down. We have a slight tick up here in Elder Force, the 13-day average of Elder Force. So that's a little glimmer of hope right here too. Let's take a look at the weekly chart. So on this weekly chart of the S&P 500, remember last week I pointed out that the Kalman filter crossed up below the instantaneous trend line here, came all the way down, and is beginning to trend up. But that doesn't mean that we're in a weekly bull market yet, or we have an uptrend in the weekly chart. There are signs of hope, and we saw all of those bullish indications last week. Now, we saw these two hammers. We saw that this was a morning star, bullish morning star formation, bearish candle, doji hammer, and bullish bar here, bullish candle. And last week, the market gapped up, opened higher than it closed. And as I mentioned last week, we would be looking for resistance at 1950 or thereabouts. And of course, that's just about where we found resistance. Actually, the market closed at 1948 and a half, 1948 or thereabouts. So we are bumping up against resistance here. The parabolic is still above the most recent bar, last week's bar. So it hasn't signaled a switch to an uptrend yet. And when we look at RSI 12, remember, it crossed above the 40% line, which is a good indication that the market may be turning around and going into an uptrend, and it's trending up a little more since we saw this bar here last week. MACD is now trending up somewhat, so that's good. It means that the bears are continuing to lose strength here. They're still in control because MACD is still below the zero line, but they're beginning to weaken as the bulls get stronger. So that's a good sign for the bulls. Williams percent R broke above the oversold region of 20% and is now approaching that 50% line, which I mentioned last week, and which, when it crosses that, if and when it crosses the 50% line, we ought to see more momentum to the upside, because with a 30 period percent R that I use, it is a very good momentum indicator. You can go back here and see what happened once it crossed above 50%. Now, one sample doesn't make a good cause effect, any kind of relationship, but you can see what happened here as an example. Okay, once it crossed above the 50% line, we got beautiful momentum, and especially when it crossed above 80%. Now, so generally, the weekly chart is bumping up against resistance. We hope to overcome that resistance and close this week above the 1950 level. The next serious resistance level would be just above 2000 at 2010, where the instantaneous trend line is. So for this trend to be confirmed, we want to see the Kalman filter cross above the instantaneous trend line if we're going to have a continuation of an uptrend. We'll see how that develops. Let's take a look at the daily chart. Now on the daily chart of the S&P 500, first thing we should note is that the Kalman filter crossed above the instantaneous trend line on the daily chart, indicating a change in the direction of the trend. We closed here a week ago, just below the 38.2% Fibonacci retracement level, and last week we breached that. We went above it. We hit the next Fibonacci level of 50%. So we are waiting now to see how much resistance we encounter here, because this 1950 level, as I discussed last week, is being cited as by many people as a resistance level to be concerned about. And oftentimes between 50 and 61.8 on Fibonacci, there is a great deal of resistance. So caution is indicated here, but the market definitely changed direction to an uptrend on the daily chart. Now, parabolic dot is below the most recent price bar, meaning Friday's. So this has signaled over here, it signaled a change in the direction of the trend. Fibonacci stop and reverse, it's called, and it stopped us here and reversed this downtrend, and now we're in an uptrend. Okay, now if we go to Jerry Appel's sum of the rate of change indicator, remember it crossed above the 4% line, which is the buy signal, pulled back a bit here, but since then it went even higher, traced even higher on above the 4% line. So this is still indicating a buy signal on the S&P. So I bought the SSO early last week, and that was small gain here. Now the MACD, we saw there was a bullish divergence here because we had a double bottom, whereas MACD traced a higher low here. So that was a bullish divergence, and sure enough, that was prescient of this uptrend that we are noticing here on the daily chart. Now MACD continues to remain above the zero line, so that means the bulls are in control on the shorter term chart, the daily chart. Now at the bottom of the chart, I use %R, as I mentioned on the weekly chart, as a momentum indicator. Learned this from Price Headley, from bigcharts.com, bigtrends.com, sorry. And what we can see is %R is now above the 80% line. I use %R with a 30 period, and usually when that gets above this line here, we have pretty good momentum to this trend. So I'm looking for this market to go higher, with a close eye on stops, keeping stops in mind, or physical stops. In fact, if I buy anything besides the SSO, I'm looking at a few individual stocks. What I'd like to do is look at some of the other charts we examined last week. So with that in mind, let me switch charts here. All right, so this is a chart we saw last week. Alex Elder sent me this a couple of weeks ago, in fact, somewhere late in January. And he said, George, look, if the new high, new low index gets to this level, historically, when it traces back above 4,000, minus 4,000, we're going to be witnessing a very nice move in the market, a very bullish move or uptrend. And sure enough, the new high, new low index traced above the minus 4,000 level, pulled back a bit, but didn't cross below it again, and is now trending higher. So this is a good indication to us, and he likes this very much. He says that this is one of the most powerful leading indicators that he's come across, and Alex is a pretty sharp guy when it comes to the market. You know, he's written many books, and we all know him. So I say that this is encouraging for us insofar as the bullish trends are concerned. Now this last chart we'll show you is the stockcharts.com chart of the S&P 500, the weekly chart, which shows us the impulse indicator, Alex Elder's impulse indicator, with the bars colored in one of three colors, red, blue, or green. And as it stands now, we have a blue bar on the weekly chart, as we see here. So that blue bar allows us, according to Alex, to go long or to be buying the index at least, if not individual stocks. At the MACD down here, we can see that there was a divergence because we made a low here on MACD as the market made a low. As the market made a lower low, MACD made a higher low. So we can see that bullish divergence of MACD on the weekly chart, which can be very significant. At the bottom of the chart, if I can move it, we can see that percent R is now approaching the 50% line as I showed you earlier. But notice how when the market is in a strong uptrend, how percent R stays above the 20% line here. In the case of supercharts, it's 80%. The numbers are just reversed, but you get the idea. So we'd like to see the Williams percent R with a 30-day period situate itself above this 20% line, beginning with a crossover to 50% and eventually above 20%, so that we can really make some serious money in this market again. So this is the end of the weekly look at the market. I hope you had a nice weekend, and we'll talk to you soon next week.